Hello, good morning. Welcome to Business 360. My name is Blyden Ukem. On Business 360 today, the world is shaken by policies from Donald Trump, and we'll begin from there. Our U.S. stock futures and the dollar fell, while gold and silver rose today after Trump raised global levies to 15% from 10% following the Supreme Court's decision. The decision from the Supreme Court to strike down his sweeping reciprocal tariffs. The move injected fresh uncertainty into the global economic outlook, hurting sentiments. And now to Africa. The Democratic Republic of Congo's central bank, Banque Centrale du Congo BCC, has unveiled a strategic move to deepen economic sovereignty, announcing plans to purchase gold directly from DRC Gold Trading SA, a fully state-owned company aggregating output from artisanal and small-scale miners. The initiative comes as the Democratic Republic of Congo navigates persistent insecurity in its eastern provinces, where the M23 rebel group controls mineral-rich territory and signals Kinshasa's growing confidence in its own mineral resources as tools to stabilize the economy. The program aims to strengthen the Congolese franc, diversify central bank reserves, and formalize the artisanal mining sector. Multiplicity of observation indicates that purchasing gold through a state channel is expected to reduce illicit flows and cut off funding for armed groups in conflict zones. The U.S. supports the initiative by providing technical guidance and encouraging transparency in the gold supply chain. Meanwhile, Africa's fifth weakest military negotiates $900 million deal for 24 Pakistan JF-17 fighter jets. Somalia ranked among the world's weakest militaries and is negotiating with Pakistan to acquire up to 24 JF-17 Thunder Block 3 fighter jets in what could mark its most significant defense investment in decades, according to Defense Security Asia. The move comes amid heightened geopolitical tensions following Israel's recognition of Somaliland and debates over airspace control in the Horn of Africa. Somalia, ranked among the world's weakest militaries, aims to rebuild its air force as it continues to battle al-Shabaab insurgents. These negotiations reflect shifting regional alliances, with Somalia moving closer to Saudi Arabia and away from the UAE, while still receiving military support from the US and Turkey. Apologies for the delay in transmission. And now to Nigeria. Nigerian government has again secured victory against an international technology contractor, a European Dynamics UK Limited, in a 6.2 million euros arbitration. This was disclosed by Kamarudin Ogundele, the spokesperson for the Attorney General of the Federation and Minister of Justice Lateef Fagbemi. The firm had entered into a dispute with Nigeria's Bureau of Public Procurement over a national e-procurement project. However, according to the statement in the ruling, which is final and not subject to appeal, the tribunal dismissed the contractor's claim in their entirety, relieving Nigeria of potential financial exposure estimated at over $6.2 million, approximately 9.3 billion naira, in claims payment and damages. Nigeria's legal team was led by Johnson & Pilner LLP, and a Nigerian business and technology law firm with Basil Udotai Esquire, a founding partner, leading the arbitration together with the firm's strategic partners and association. In October last year, the UK's Supreme Court ordered Process and Industrial Development, an offshore company, to pay £44 million in legal costs to Nigeria. In 2023, Nigeria had won an $11 billion PID case in London, UK. Still in Nigeria, the World Bank is set to approve a fresh $500 million loan to Nigeria next month. The loan is aimed at boosting agricultural productivity and strengthening key value chains across participating states. According to official project document at the weekend, the loan has an estimated approval date of March 30, 2026. The World Bank noted that creating more and better jobs while tackling food and nutrition insecurity remain one of Nigeria's most pressing development challenges. The planned loan comes amid a continued rise in Nigeria's external debt profile. Data shows that funding from the International Development Association increased by $1.9 billion within 1 year, reaching $18.7 billion as of December 31, 2025. According to the Debt Management Office, Nigeria's total external debt stood at $46.98 billion as of June 30, 2025. Of that amount, the World Bank Group accounted for $19.39 billion. Meanwhile, the Petroleum and Natural Gas Senior Staff Association of Nigeria, PENGASN, has renewed its call for the federal government to divest majority shares in the nation's state-owned refineries, urging authorities to adopt the Nigeria LNG model by selling at least 51% of equity to core investors. Under this arrangement, the government would retain a minority stake while selling a majority shareholding to core investors. The national president of PENGASN and the Trade Union Congress, Festus Osifo, made the recommendation, stating that the union had consistently canvassed partial privatization, and looking at refineries over the past 2 decades, insisting that government ownership structure had hindered efficiency and commercial viability. Meanwhile, President Bola Tinubu has approved the payment of 2.8 trillion naira to power generation companies as the federal government's verified liability for accumulated electricity subsidies dating back to 2010, according to reports. This was as he rejected the 6 trillion naira claim submitted by the operators and insisted he'll not pay a naira beyond the audited figure. Highly placed officials in the presidency and the Federal Ministry of Power with direct knowledge of the negotiation revealed this. The approval followed months of negotiation and a tripartite audit involving the Ministry of Finance, the Nigerian Bulk Electricity Trading PLC, and the generation companies themselves. It also comes days after the Nigerian Labour Congress accused the Gencos of attempting what it called a heist of the national treasury. The Gencos had demanded 6 trillion naira and proposed 3 trillion naira in the federal bailouts. And now we'll go on a quick break, and when we're back, the conversation at the newsline continues in the world of business, looking at Seal Nigeria's story as federal government and 10 others list 1.175 trillion naira securities on NGX. Don't go anywhere. Welcome back. It's your Business 360, and my name is Vladimir Kim. Still in the context of Nigeria, the federal government and 10 others are they've listed 1.175 trillion naira securities on Nigeria's exchange. The federal government and 10 banks have listed new securities worth 1.175 trillion naira on the Nigerian exchange NGX so far in 2026, driving growth in the capital markets. The surge in new listing is part of a broader trend of increased capital market activity, with the NGX market capitalization surpassing 100 trillion naira in January 2026 and rising to over 125.164 trillion naira as of February 20th, 2026. Analysts attributed the strong performance of the Nigerian capital market to stability in the foreign exchange market, companies recovering from foreign exchange losses, market liquidity, and capital inflows. The ex-compliance report of the NGX showed that as of February 20, 2026, Dangote Cement listed a total of 119.874 billion naira in a commercial paper on the NGX. FGN Roads, a Sukuk company, also listed 300 billion naira in Ijara Sukuk, and the Lagos State government listed 230 billion naira in a fixed rate bond and 14.815 billion naira in the green bond. The federal government had two listings, worth 4.18 billion naira in January 2026, while United Bank for Africa UBA PLC, a First Hold, a corporation PLC, and Guarantee Trust Holding Company, a GTCO, a PLC, listed new issues valued at 251.6 billion naira in the period under review. Also, a Presco listed 236.7 billion naira in shares arising from its right issues, while LFZC Funding, SPV PLC, listed 16.1 billion naira in infrastructure bonds. Zichi's Agro-Allied Industries PLC was admitted on NGX by introduction with shares worth 1.09 billion naira, and Morrison Industries PLC listed 400.3 million naira of private placement issues. Up next would be a global economic outlook. And now to global economic outlook. Singapore inflation climbs to 13-month high. Singapore's annual inflation rate rose to 1.4% in January 2026, the highest reading since December 2024, accelerating from 1.2% in December. The main upward pressure came from a sharp increase in housing maintenance and repair costs, which surged to 27.9%. Inflation also picked up in housing and utilities, healthcare and recreation, sports and culture. Meanwhile, food inflation held steady at 1.2% as declines in rice and leafy vegetables were offset by higher prices for cakes and pastries and breakfast cereals. Transportation inflation also slowed to 2.4%, while deflation persisted for clothing and footwear, and information and communication remain in deflation. And now looking at the chart, as we can see on the screen, the chart indicating inflation in Singapore. According to the chart, inflation rate in Singapore, as at last year, stood at 12%, began to slow down and went to a low point, rather 1.2%, and slowed down to a low point of 0.5% before increasing back. And the last 4 months, inflation, first over the last 3 months, rather 4 months, inflation has been stable at 1.2% before hitting 1.4%, indicating a slight increase in the prices of commodity in Singapore, but the economy relatively stable. And now to the markets. Let's look at market outlook after now. To the market this morning, oil falls as traders weigh Iran nuclear prospects. WTI crude oil futures fell below $66 per barrel today, retreating slightly from a 6-month high as investors weighed the likelihood of US-Iran nuclear deal, with further negotiations expected later this week. Iran's foreign minister said a diplomatic win-win solution is within reach and confirmed plans to meet a US envoy, Steve Witkoff, in Geneva. At the same time, reports indicated that any U.S. military strike on Iran would be limited to select military or government sites, reducing the risks of broad supply disruption. Traders remain mainly concerned about potential traffic risks through the Strait of Hormuz, a key corridor for regional crude exports. And now to the markets. The energy market first. Afterwards, we'll look at agricultural market and the metal markets. The energy markets. Energy market begins with the price of crude oil, a U.S. crude price level standing at $66 per barrel, downward at 0.274 point this morning. A Brent's price, which represents Nigeria's price benchmark, at 71.436 U.S. dollar per barrel, dropping at 0.324 point this morning, negative 0.45%. Natural gas gaining at 2.12%, gasoline falling, hitting oil, coal a little here, a little there. Still looking at the market, gold climbs on tariff uncertainty. Gold climbed nearly 1% to around $5,150 per ounce today, reaching its highest point in over 3 weeks as renewed tariff worries prompted a rush to safe haven assets. Trump confirmed that new duties would take effect immediately, although it remained unclear whether he had signed any official documents. Investors also feared and face growing fears of a potential U.S. military strike on Iran, with nuclear talks at an impasse. However, our negotiators are scheduled to meet again in Geneva on Thursday. And now, to the metal market. Afterwards, we'll look at the state of agricultural market, the metal market this morning. A metal market indicates the price of gold. A gold price standing at 5,144 US dollars per ounce, and we're talking about a gain of 35 points this morning. And we're talking about silver, and silver price indicating at 86 US dollars per ounce, gaining 2.028 points this morning. Copper price downward a negative 0.16%, and steel price also gaining 0.53% this morning. Agricultural market. Agricultural market indicates a price of soybeans at 1,131 US dollars per bushel, falling a 5.62 point this morning, and wheat price dropping 1.6 point at a price level of 571 US dollars per bushel. Palm oil price gaining a 2.79% at a price level of 4,126 Malaysian ringgit per ton. Quickly to the FX market as we look at FX updates. Top currency gainers, Japanese yen gaining 0.37%, and Swedish krona 0.29%, and the euro 0.28% gain, and British pound up by 0.27%. The biggest losers is dollar index falling a negative 0.3%. Let's look at the Euro USD market, and afterwards we'll talk about the USD Naira and cryptocurrency market. The Euro USD market this morning. A Euro USD market indicates a price level of 1.18 points, which is $1.18, equaling €1. The euro gaining 0.21% appreciation over the dollar. The pound against the dollar, $1.35, equaling £1. The pound gaining 0.26% over the dollar. The Aussie also gaining, but no significant change in that market, and volatility for that market being quite low. The New Zealand dollar against the US dollar, the New Zealand dollar gaining 0.13% over the US dollar, while the US dollar is struggling against the Chinese yuan and the Japanese yen. Let's look at the state of the Naira. US dollar against the Naira. A US dollar against the Naira price level stands at 1,342 Naira, equaling $1, and the euro against the Naira, rather the US dollar dropping a negative 1.7 points against the Naira. Similarly, well, not similarly entirely, the euro gaining against the Naira a 1.116 point over the Naira at 1,584 Naira, equaling €1, and the pound also gaining a 2.2 point over the Naira at 1,813 Naira, equaling £1. Now quickly, let's look at the cryptocurrency market this morning and what the digital coins are doing and the performances this morning. A Bitcoin leading the pack, but the entirety of the crypto market seemed to be downward, despite the fact that the volatility isn't too much. But Bitcoin price dropping a whopping 1,390 2 points this morning at a price level of $66,291 for one Bitcoin, a negative 2.06%, Ether dropping equally 47 points, a negative 2.41% at $1,910 for one Ether, Binance on the negative, Cardano, Solana, Ripple all falling. Still on the markets, looking at the equity market. European stocks head lower on tariff uncertainty. European equity markets were on track for a weaker open today as renewed tariff uncertainty dampened risk appetite. On data front, investors will monitor Germany's Info Business Climate Survey for February and Italy's final January inflation figures. No major corporate earnings and releases are scheduled in Europe today. Meanwhile, in pre-market trading, Euro Stock 50 and Stock 600 futures were down 0.5% and 0.4% respectively. Quickly, let's look at the state of African businesses as Nigerian stock market swells by 25 trillion naira in 7 weeks. The Nigerian equity market is currently experiencing what industry experts have described as a phenomenal rally, closing last Friday at 125.1 trillion naira in market capitalization, up from 99.38 trillion naira recorded on the final trading day of 2025. So far in 2026, the market has kept a bullish note as investors gain over 25 trillion naira in 7 weeks. This is just, as market players projected, a red card as the Monetary Policy Committee MPC of the Central Bank of Nigeria meets this week, saying this would sustain the bullish performance of the NGX. The 304th MPC meeting, first in the year 2026, has been fixed for today, Monday 23rd, and Tuesday, February 24, 2026. Trading on NGX closed on December 31st, 2025, with Nigeria's capital market ranking among the strongest performing globally. This was driven by strong corporate earnings, sustained macroeconomic reforms, and renewed investor confidence. The market hits the 100 trillion naira milestone in January. Data from the NGX showed that the total market capitalization rose by 6.8 trillion naira or 6.8% to 106.15 trillion naira as of January 30, 2026 from 99.376 trillion naira at the close of trading on December 31st, 2025. The rally pushed the market past the historic 100 trillion naira mark early in the year, underscoring the resilience of the bourse amid lingering global and domestic uncertainties. The market operators attributed the upbeat performance to strong earnings by listed companies and the cumulative impact of reforms undertaken in recent years by the Central Bank of Nigeria (CBN) and the NGX, which have strengthened market fundamentals and deepened investor participation. The NGX All-Share Index closed January 2026 at 165,370.4 basis points, representing a year-to-date gain of 6.27% or 9,757.37 basis points from its opening level of 155,613.03 basis points. By contrast, the market performance in Nigeria 2025 was relatively modest, with the All-Share Index closing at 104,496.12 basis points. February's gain at 19 trillion naira so far. In the second month of the year, the Nigerian equity market has taken the bullish trading to a higher level, with investors gaining about 19 trillion naira so far in the month. Investors gained 8.13 trillion naira only last week. And the penultimate trading week, the market capitalization gained over 6 trillion naira to settle at 117 trillion naira from 110.2 trillion naira. Last week, the market gained in 4 of the 5 trading sessions as equity capitalization surged to 125.1 trillion naira from 117 trillion naira recorded the previous week. The All-Share Index appreciated by 66.95% to close the week at 194,989.77 from the 182,313.08 recorded the previous week. Market analysts attributed the rise in the equity market to reduction in inflation, naira appreciation, and impressive performance of the listed companies last year. Well, this is the most we can take when it has to do with performances of the stock market, especially a Nigerian point of view, and the entirety of business world and the generality of the market and economy. Thank you for being a part of it. My name is Bladon Kim. We draw the curtain on Business 360. Thank you for watching.